Well, hello everybody, this is Erin King coming to you with the weekly real estate update. This is actually going to be an interim update because we just have so many things going on right now. I want to make sure you guys are all up to date. As we always promise, we want to make sure you have the most accurate and current market information. And this week we're going to be talking about interest rates. Up and down, up and down. Where's the market going to go? Is it going to go up? Is it going to go down? Is it going to stay the same? Today we're going to cover two questions directly. One, how have rising interest rates affected home prices in the past? This won't, in this rising interest rate market that we're getting into here, this will not be the first time that we've had a rising interest rate market in the U.S. So we have plenty of data to go back and look upon. So we're going to look on that today. And number two, how have rising interest rates affected home sales in the past? Home prices and home sales. Let's get on with the update. I'm going to start right here with the most recent information from Freddie Mac. Mortgage rates hold steady into the Thanksgiving holiday. So despite the noise around the economy and inflation, monetary policy, mortgage rate volatility has been relatively low for most of 2020 and definitely through 2021. And we expect this to remain relatively stable going through 2022. Mortgage rates have stayed within about 0.5 percentage point, which is a smaller range than a lot of past years. And by the way, add coronavirus in, right? We've got a pandemic going on and everything going on in the world right now. The average 30-year fixed right now is holding on around 3.1%. So we just want to make sure, again, we have context here. We understand home prices are higher than they've ever been, especially here in the Northeast Florida market and in Jacksonville. And we understand also that your budgets can only handle so much at one time. But remember, if you're out there buying or selling with one of these bubble mentalities, we're here to correct that and provide you with the context to maybe think a little bit differently about either going on the market to sell your property or on the other side of buying. The market has certainly slowed down, even though we did have an uptick at this last month. It is still markedly slower than it was 6 months ago. It is still extremely competitive for buyers out there, but we know that there are some opportunities out there. I'm going to show you this graphically. Before the pandemic started, rates were knocking on the door of about 4%. I know when we bought our last primary residence here in Jacksonville in 2016, we locked in a construction loan for 4%, and I thought I robbed a bank. I thought we had a great deal. And then look what happened during the pandemic. So we see everything drop. Now the Fed seeks to influence rates. The Fed doesn't have a direct control knob on rates up or down. They just seek to influence them. And somewhere around 2 3/4, maybe lower than that. I think we had about a 2.65 at the low. I know I had some clients that closed on some of their loans that were just getting ridiculous rates. And today we see it around 3.1%. It's still a very, very good financing relative to buying a home. But still the word out there is that the rates are going to be rising. And we want to certainly talk a little bit more about that news and continue to watch the Fed. The Fed is going to have to start raising rates. We don't think they're going to grab a hold of the wheel and yank real hard, but we do feel as though that they're going to be raising those rates here before too long. What does that do across the country? Is that going to slow home sales? Is that going to slow appreciation? And we're going to talk a little bit more about that. But let's get a couple of perspectives first about where we think rates are going. They're most likely going to be back to where they were. And that's the simple answer. They're probably going to be hovering between 3.75 and 4.25, somewhere around in there. But let's take a look at the historical perspective on rates. So if you remember this graphic from a little while back, we go all the way back to 2016, 2017, 2018, and 2019, for what we would call normal years of real estate, before 2020, which was an abnormal year. And we see 3.5, maybe call it 5% on the high end. And we've ended up here having 2 phenomenal years in real estate, but I think we're going to be headed back to a more normal real estate market. But let's listen to the experts. I'm a real estate professional. I'm certainly not in the mortgage industry, but let's see what the experts have to say. So we take a look at Freddie Mac, Fannie Mae, MBA, NAR, and we took up the averages of all that. Well, in 2022, they're saying about 3.5 to 4%. And I'm not here to forecast or pin any of these rates to a wall, but I think it's safe to say that interest rates are just going to go back, like I said, to where they were. let's get to the very first question here. How have rising interest rates affected home prices in the past? And we can see here from this graphic is rising mortgage rates only slightly impact home prices. And this graphic goes all the way back to 2000 and takes the interest rate environment in the yellow, you can see there in the red on the line compared to the appreciation on the bar graph. Now what always stands out is the years of depreciation during the housing crisis. But we can see a trending interest rate environment. It hasn't obliterated the housing market. And we've been hearing some news lately that there are some people out there forecasting that if the rates climb up above 4 or right around 4, that it's going to decimate the market. I don't know if I agree with that statement or not. The next rising interest rate environment is coming out of the real estate crash of 2008. And we know the story of that. You know, again, if you could fog a mirror in 2005, you could buy as many houses as you wanted because lending oversight was not very good, if at all. Now, the underwriting standards are very strict, and I'll refer you back to another deep dive that we did a couple of weeks ago where we talk about how hard it is to get financing now. So, you know what? Interest rates rise, which will impact appreciation. Well, maybe slightly. If you go back to what we talked about a few weeks ago, we're hearing forecasters say appreciation looks to be healthy moving forward, but nowhere near anything like depreciation as the interest rates rise. Let's see what Mark Fleming had to say, and he's the chief economist for First American, and he says, house price appreciation is resistant to mortgage rates, primarily because most home sellers would rather withdraw from the market than sell at lower prices, a phenomenon we refer to as downside sticky. And so to talk about downside sticky a little bit, when we saw the interest rates go way down during the pandemic last year, the listing market was on top of that, like Velcro. Prices immediately started to shoot up in relation to rates going down. But sellers aren't so willing to give that back as the interest rate market creeps back up. So it's very sticky. We see a big lag between, if at all, when sellers lower their prices versus rising interest rates. So look at the second question. What is the historical impact of rising interest rates on home sales? We can see that if we go all the way back to 1989, the interest rate environment as compared to home sales, we can see rising interest rates do not impact home sales. So you can see home sales grow through those. And indeed, the crash of 2008 will be the anomaly. And again, we have to pull that out of the data that we have right now because the conditions that cause that are not the conditions that we have right now. But we go back to 2005 and 6, but in all other cases, home sales grew. Why is this? Well, because rising rates are actually a sign of an improving economy next year. And that's what we can expect. Again, I know we've got Omicron is out currently and the market's still trying to figure out what that's going to do, but we know the market is trending on getting itself back to normal. And as the economy improves, more people have the capacity to go out and buy a new home and go on vacation. And all this is going to be at the mercy, though, of coronavirus. There's no doubt that this underlying theme is that the economy will take the path of what's going to happen, regardless of coronavirus. We want things to get back to normal. But context always matters. You know, I always say this. So the important thing here is that we get the context. So we go back to Mark Fleming, and it says context matters for purchase demand. The economy is improving, and millennials continue to age into their home buying years in large numbers. So the context remains good for the housing market. And then keep in mind, we've got probably 25 to 50% of Gen Z getting into the market early. They're not waiting like the millennials did into their 30s to buy a home. So we've got even more pressure on markets. And I think I said this a couple of weeks ago. You know, it's interesting when you go out at 30,000 feet here and you say, what's really going on here? Well, you've got a large percentage of baby boomers who are downsizing. You've got millennials that are just getting in. And then you've got Gen Z, a quarter to a half of Gen Z that's getting in as well. And everybody's basically fighting over the same house. It's this 1,700 square feet to 2,200 square foot home that's 3 bedrooms, at least 2 bathrooms. You know, I kind of nicknamed it the Chip and Joanna Gaines whitewash special. You know, it's got the white kitchen and the hot white bathrooms, and you know, it's still a multiple offer situation. But we just don't have enough nice homes on the market. So, you know, as a real estate professional, rising interest rate environment to me, although it is a little bit sticky for buyers, I see it as a healthy move and something that the market needs to do in order to get itself back to something that looks like normalcy. I want to go back to one of the other quotes I talked about a little while ago from Danielle Hale, where she says listings rose for the second week in a row, with our recent survey data suggesting that a growing share of homeowners are potential sellers eager to find new homes. There is reason to believe this may be the start of a welcome trend, especially as we move into the colder months. So no doubt over the last year, people have put off their home buying plans because of the pandemic. And we're seeing more and more people say, I want to sell a home. I want to buy a home. We expect that to continue through the winter. So folks, again, I appreciate your time. Interest rates, we've just shown you several graphics where we say, interest rates they have a small impact on home prices, and they have an even lesser effect on home sales and closings. So if you're in the market right now to consider purchasing a home, if you are considering buying a home, and if you're in the Northeast Florida market and we haven't talked, I would love to engage with you a little bit more. If you're a real estate professional and you're watching this content, I appreciate it. If you have a differing opinion or you want to start a discussion, hit me up in the comments section. Like and subscribe to the channel if you enjoy the content. I certainly enjoy bringing this stuff to you. So I hope you have a great week. We're going to be bringing you a lot more information as the days and weeks go on here, and I hope you have a great one. We'll talk to you soon. Bye-bye.